At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, October 17, 2023, Nvidia stock dips on US-China chip restrictions. New restrictions are clouding the narrative for Nvidia stock. Shares of semiconductor giant Nvidia are falling conspicuously on Tuesday. The U.S. Department of Commerce said that it will constrict artificial intelligence chip exports. Nvidia stock faces a murky future as investors digest conflicting views. After inking a blistering print in the charts this year, Nvidia, Nasdaq NVDA, stock is suffering a significant blow to its bullish narrative. Earlier today, the U.S. Department of Commerce stated that it would significantly constrict exports of artificial intelligence chips, according to a report by the Wall Street Journal. While Nvidia management has put on a brave face, conflicting internal statements are also casting a cloud over Nvidia stock. With the Commerce Department's announcement, it will be much more difficult for U.S. companies like Nvidia and rival Intel to sell existing products in China. Additionally, semiconductor firms will likely encounter roadblocks to introducing new chips to sidestep the regulations. As Wall Street Journal states, this latest move targets perceived loopholes in export controls that the federal government announced back in 2022. Naturally, that measure escalated tensions with China, a top market for AI and machine learning related products. According to U.S. Secretary of Commerce Gina Raimondo, the intent of the new restrictions is to curb China's access to advanced semiconductors that could fuel breakthroughs in artificial intelligence and sophisticated computers. With AI playing a vital role in Chinese military applications, the U.S. has serious concerns about falling behind in defense technologies. Still, such rhetoric is unlikely to satisfy Nvidia stock investors. Indeed, the U.S.-based Semiconductor Industry Association has already criticized the new rules, highlighting overly broad, unilateral controls that risk harming the U.S. semiconductor ecosystem without advancing national security. The impact on Nvidia stock becomes hotly debated. Notably, Nvidia management has put on a brave face when it comes to the potential negative impact of this news to Nvidia stock. We comply with all applicable regulations while working to provide products that support thousands of applications across many different industries, a company spokesperson told Seeking Alpha. The spokesperson also emphasized that, because of strong global demand for its products, Nvidia doesn't expect a near-term meaningful impact on its financial results. On paper, that may seem like a solid endorsement for the forward-looking bullish thesis of Nvidia stock. However, Wall Street Journal points out that earlier statements by Nvidia contradict the current framing of the problem. Specifically, Chief Financial Officer Colette Kress said in June that long-term restrictions on China will result in a permanent loss of opportunities for the U.S. industry to compete. Adding to the argument, Kress noted that the impact of Nvidia's future business and financial results depends on China. And that's not an alarmist concept. While experts project the U.S. to dominate the global AI sector, the Chinese AI market may exceed $26 billion by 2026. Hardware, the very kind that Nvidia sells, is also predicted to make up 56% of the Chinese AI market. Why it matters? So far, analysts don't appear to be fazed by the announcement, although that may change in the future. For now, analysts peg Nvidia stock as a consensus strong buy. This assessment breaks down as 37 buy ratings and 1 hold rating. Overall, the average price target for Nvidia stock lands at $650.53 per share, implying roughly 41% upside potential. Thanks for watching.